Hello and welcome to this video. In this video, we're going to be talking about a topic we get asked all the time here at Boffix. And that is, when I become VAT registered, what can I claim back? Especially pre-registration. So if you think about it, one of the perks of going VAT registered is if you've hit the threshold and you're forced to become VAT registered, or if you voluntarily become VAT registered, then either way, you will have the opportunity to claim back VAT prior registration. And the idea is that really straightforward, that when you sell an item with VAT on it, so it doesn't matter if it's goods or services, when you make a VATable sale, then the theory is that everything that you've incurred VAT on, you're able to claim back. So if you think about it, something as simple as your PC that you've used to create that expense or create that sale, well, because you've used it to create the sale, then you should be able to get the VAT back. There are some rules and regulations around it, but that's what we're going to cover in this video. So sit back, relax, and let's find out exactly what you can claim on VAT. And also as a bonus tip as well, I'm going to show you how to make sure that you get it right first time and each time in QuickBooks Online. Let's have a look. Hello, my name is Aaron Patrick and I am a chartered accountant, a certified UK trainer with a fancy new logo, that QuickBooks Chap on the internet, and head of accounts here at Boffix. Now, in today's video, we're talking about how VAT registration and also pre-VAT registration affects you. What can you claim, how can you claim it, and everything else in between. So first of all, let's go through the rules themselves. You see, pre-VAT registration expenses are effectively certain expenses that you can claim prior to the date of becoming registered. Let's make a complete date up. Let's say that the 1st of January of your particular year is the day that you become VAT registered. But to get to that point, you may have incurred expenses and have assets and have items that you're going to use to make VATable sales later down the line. And just because you came VAT registered on the 1st of January doesn't mean that you don't just have the ability to claim VAT on purchases and expenses past the 1st of January, but you have potential to claim expenses before the 1st of January as well. And that's what we're going to talk about today. Now, generally speaking, when it comes to what you're allowed to claim, it comes onto two categories. The first one is goods and items. Well, you have actually the chance to go back 4 years from the date of registration to the date that you actually can. Now, there's some caveats to them that you can claim back, but 4 years is a long time. And then there's services. And services give you the chance to look back 6 months. What's the difference between goods and services? Well, services are your subscriptions and items like that, whereas your goods are going to be actual physical items that you've purchased and then been able to utilise. Just remember the golden rule to all of this though. For you to be able to claim VAT back, you have to have made a VATable sale, or you have potential, or you are looking to make a VATable sale. Because VAT in principle is that you are now going to add VAT onto your goods and services that you sell. So because you're adding VAT onto the goods you're selling, then you get to claim VAT back on items that you've purchased. Now, there are some conditions that are set when you are looking at the prior VAT registration expenses. The first one is the goods and services had to be bought by you or the company that is now VAT registered. If you're a sole trader and it's you that's become VAT registered, or if your limited company has become VAT registered, then the goods and services have to be in that name. The goods purchased have to be for VATable expenses only. So if you have some private proportion to them or anything like that, then they're not going to be able to be claimed. Unless it's something like a computer where there's going to be private use, is when it's more of an asset that you are buying. It has to be strictly for business use. And then the key bit, the goods still have to be owned by you at the date of registration, and you have to be able to show that those goods are going to be used to make other goods sold. So again, a great example is a computer, an iPad, something like that, that you use to be able to create that final sale. Even if it was just what you were using to print off a label or something, it has to be an item that you still own when you become VAT registered. Now, you cannot claim any VAT whatsoever if they fall into these following categories. So the first one is goods that have been completely used up. Now, I've been there in client meetings where I've told them they can go back 4 years to be able to claim VAT, and their eyes light up. They're like, actually, I've incurred quite a lot of VATable expenses in the last 4 years. But there's a caveat. If you've already used them up by the date that you've had your registration, then they cannot be used. Great example is something like petrol, gas, electricity, that sort of stuff. Well, if you've bought it prior to registration and now it's all used up, you won't be allowed to claim it as a pre-registered expense. Goods that have been already sold or supplied before registering VAT. Remember back to that golden rule? For you to claim back VAT, you have to sell something with that VAT on it in the first place. Well, if you bought some stock items beforehand and you've already made a sale on them and you sold them without VAT back then we can't claim back from now. This does cause a bit of a headache when it comes to you becoming VAT registered. One of the things I highly recommend to all my clients is at that VAT registration date, do a quick stock take. Anything that's still in your stock inventory as at the date you become registered, well, they're the items you can go back to and claim the VAT for, because you haven't yet sold that item and your intention is to sell that item later down the line. And just like any old VAT as well, if they've got anything to do with exempt supplies, again, you can't claim them. Potential for partial exemption, but I don't think that's going to be something that's going to be really useful to you, and it's something you probably want to stay away from for pre-registration expenses. Final bit of golden nugget though, like every other piece of VAT claim that you're going to make, do make sure you actually have that VATable invoice or receipt available to be able to prove to HMRC that you were charged VAT in the first place. Now, how are you going to keep these VAT expenses? Obviously using QuickBooks Online. If you are going to be using QuickBooks Online, use the links below. Even if you're using QuickBooks already, I bet you we can save you some money on your QuickBooks. Use the link, head over to our store at Boffix, and you'll be able to see some discounted QuickBooks licenses that we just can't wait to let you utilize. Now, let's go back to that practical way of claiming your VAT pre-expenses on QuickBooks in the first place. Okay, here's my VAT page. Let's assume on this one, as we already said, it was the 1st of January 2022 that we were looking to make sure that we were VAT registered by. So think back to the rules we've just gone through. From the 1st of January onwards, we can definitely claim VAT on qualifying purchases and qualifying services going forward. But what about stuff prior to the 1st of January 2022? How do we account for them? Well, we've already put them in QuickBooks Online, and there's two ways we can account for them. The first one is a bit of a hack, I suppose. It's about using things called journals. And honestly, this is the one that as accountants, we would probably recommend the most. But we're not really using the best out of QuickBooks. But let me show you what I mean by it. If I ran a report and I looked at my trial balance report, then you'll notice that when I look at my trial balance report, all dates, run report, then I've got some assets available for me to utilize, plant and machinery in this case. Let's assume that's a computer or equipment I'm using to actually make my sales of goods or services in the first place. So it's definitely going to be something qualifiable. Well, probably the easiest way to do that is to create that journal entry. I would go in, I've already created it just for completeness in my case. And what I'm saying is that this plant and machinery, well, it was 2,500 with some VAT on top. And what I've also done is gone against plant and machinery again, but this time no VAT. And what's this created for me is what we would call a VAT-only journal. So let's put this first to the first 2022 and then save and close. Then you'll notice here, and in fact, if I show you a nice handy feature you'll like to see, called adjusted trial balance, you see exactly what I've done here. Originally, we had that £3,000 of plant and machinery. I'm now claiming £500 of VAT, meaning going forward that the plant and machinery now shows at 2,500, meaning I now have a nice £500 extra to my VAT account, basically claiming the VAT. Okay, that's like the accounting way of doing it. And if you're good with journal entries, knock yourself out. It's a really good way of doing it. But how would your normal people go against actually doing this sort of thing? How can we let QuickBooks allow it for us? Well, watch this bit. First thing what I'm going to do is let me just reverse that journal entry we've just done. You can see that definitely works and that's fine, great, wonderful. But I'm just going to reverse it because at the end of the day, I don't want it to do it that way. I want to let QuickBooks make things work for me. Well, if I go to my taxes section, and you'll notice that at the moment, I've turned off MTD. To do that, I've gone into edit settings and I've made sure MTD is turned off. The reason for that is that means I can do manual VAT adjustments and everything else, but then when I want to file VAT again, I just turn it back on. Well, what I'm going to do is I'm going to let QuickBooks understand that we've become VAT registered, and I'm going to file a return. I'm going to go prepare return, And because I've got VAT turned off, I'm actually going to do the 31st of the 12th, 21 to the 31st of the 12th, 21. And what will happen is it will create me a nil return. Basically what's going to happen is the date that we've put there, 31st of 12, 21, a line will be put in the side of QuickBooks. That line going backwards and backwards and backwards and backwards is going to be all the items are going to have stamps on them to say they've been filed as they were. So in my case, if I say marked as filed and continue, then QuickBooks is now going to generate my next return, 1st of January to the 31st of March. All I need to do, edit that, edit settings, and then I turn VAT back on again for MTD. Once I've turned it back on, I can file. But here's the secret sauce, because now those items that I already have in QuickBooks, let's go back to that reports, trial balance, that £3,000 of plant and machinery. Just going to extend it to all dates so I can see the transaction. Ignore my journal entries, but if I go to that £3,000, this is machinery. When I originally did this, I put no VAT because I wasn't VAT registered. I'm going to put it to inclusive of tax. Then I'm going to go and change it to 20% VAT. And then you'll notice that because I was inclusive of tax, it stayed at 3,000, but it's worked back the VAT for me, 2,500 with 500. Let's assume I've also got my attachment there with my VAT invoice on. So now QuickBooks know how I wanted it to be shown in the first place. I press save and close. You'll notice that when it comes up with this transaction might affect a tax return you've already filed. Well, we haven't really filed anything yet, but the key is that now the VAT amount for the agency will be brought forward to the current VAT period. Do you want to continue? Yes, I do. And this is where QuickBooks becomes a magic source for you. So I'm at the VAT screen now, and what I'm going to do is I'm going to press prepare return. And you'll notice that there's now 2 columns. And the columns are basically saying that there's a £500 adjustment here because that £500 adjustment is something you made in a previous period. So that means I can go through all the transactions I know that should have VAT on them that was pre-registration, and now I can make sure that they appear just here. And to see that in a little bit more detail, if I was going to error check the return before I send them, notice how you have one transaction that may be an exception. Review that. And an exception is effectively a transaction that you filed as something before, now you're filing it as something new. And the difference here is if I look at the transaction, was that I originally had a no VAT against them, now I've got 20%, so this £500 coming forward is all about me bringing a transaction in that was in pre-registration. That's how to make sure that QuickBooks does all the hard work for us and gives us the opportunity to make sure that we're getting the VAT that we are due. Remember, if you want pre-VAT registration transactions, then it is 4 years for goods, 6 years for services, but don't forget that those goods basically haven't had to have already been consumed. And realistically, you want to be making sure that whatever you sell with VAT on them, then that goods or service that you've had will relate to that item that you've sold. If you've done all that, then you get to go back 4 years or 6 months, and that means you get some VAT back for you. This should help your business. Now, if you want more tips and tricks on QuickBooks Online, don't forget we have our sister channel, Aaron Patrick, the QuickBooks Chap. Just do a little Google search and you'll find that nicely. Don't also forget to like and subscribe this channel and also that channel, because the more people that we show about getting stuff like this is going to be better for every little small business out there. Our motto here at Boffix is we want small businesses not just to survive, but thrive. And being able to make sure that you can get the right pre-registration VAT is definitely a surefire way of ensuring that they're not just surviving, but thriving. My name has been Aaron Patrick, and I do hope this video has been useful to you. If it has, let us know below. Comment. Let us know if you've got a better way of being able to claim your pre-registered VAT. We'd love to hear about it. As I've said, my name is Aaron Patrick. It's been an absolute pleasure to do this video for you, and I'll see you in the next video. Bye for now.